Didn't give it a flashy name. Perfect. Credit banking mastermind #1. All right, I'm excited. All right. All right. Well, hello, YouTube. Welcome to CJ Wallace's YouTube channel. We are guest hosts, the Wise Guys in Ties. Oh man, CJ's here as well. Oh man, we had a great talk with CJ. I'm super excited. Every Tuesday night, we're bringing to you Credit Banking Mastermind. This is #1. So I'm just giving a little bit of time for folks to get in and join the live stream. But this is where you're going to be able to participate. This is highly interactive, and I got some resources to definitely help you out and make sure that you're able to participate with us. So let's go ahead here. And of course, everybody can see my screen. I just need to be able to see my screen now. All right. So here we go. Let's talk. What are we talking about today? Credit banking and the search of the lost American dream. I'm so excited. We're going to be bringing this to you every week. And we're going to be talking about different facets of credit banking. Now, what is credit banking? Of course, credit banking is the same thing as you might hear velocity banking, or you might have heard terms as mortgage sweep strategy, or you might have heard terms such as cash flow banking, infinity banking. There's so many different nuances and strategies. We are going to basically generalize the whole discussion because we're going to be able to talk not just about credit banking and debt reduction strategies, but we also want to talk about wealth creation strategies as well throughout this mastermind. However, this week we're going to focus a lot on budget. Now, each week when we host these weekly masterminds, we want people to submit questions, and also we have something very exciting, and I want to get to that, so it's on the next slide. So I'm Joseph Smith. My business partner is Ray Fleming. He'll be manning the chat, answering questions and getting those questions to me as well. If at any point you want to give us a call or contact us, that's our contact information on your screen. But also, here's something very exciting. On our website, if you go to wiseguysanties.com/credit-banking, you'll get a form and you can participate in this webinar. So in the webinar-based form, which this is broadcasting on YouTube right now, but on the webinar form, we broadcast on other places as well, Facebook and other places. And so we have a lot of other folks that are joining us. But when you go to wiseguysanties.com/credit-banking, what you're going to be able to do is sign up and register for these webinars to be able to be a part and participate and share your information. So the required information is your first name, your email address, your phone number, just so we know how to communicate to you. Now, we don't share your information with anybody, so you have no worries there. You also have to check mark these 4 boxes that basically tell us that you want to participate and that you understand that it's your responsibility to consult with actual financial professionals to implement these strategies, that you're choosing to do this mastermind at your own risk, and that you don't hold Wise Guys and Ties, which is my company, or myself, liable for your business's success or failure. Unfortunately, because of the world we live in, I've got to put all these little disclaimers in there. But if you put your information in there and you check mark off all the boxes, you're in. You'll get the link to the webinar and it'll be emailed to you, and you'll get reminder emails. when they're coming out. It'll be always Tuesday nights, 7 p.m. Mountain Standard Time, 6 p.m. Pacific, and that's 9 p.m. Eastern. We want everybody to be able to participate. Now, on this form, when you go to the page and you scroll below, there's a whole bunch of optional fields for you to enter information in. And if you fill those out, we'll be able to take your information and go over it on each of these individual masterminds. What does that mean? You'll be able to put your income in and your expenses, and you can itemize different things out. Basically, whatever maybe you have a student loan or a home loan, something you need to get rid of, and you want to use the credit banking strategy to eliminate that debt quickly. Well, by you putting the information in, we will be able to go over that information on these masterminds with you live. And that's what's really cool. Now, we're keeping everything general. We're not sharing anybody's name or information when we go over this information so that nobody knows anything. But what we want to do is we teach and we train a lot on how to do credit banking, on how to implement debt reduction strategies. But a lot of times we give you just general concepts. The purpose of this mastermind is for us to come together and for us to work specifically on your actual numbers. Look at this as a chance to get coaching and mentoring, but also to socialize and network, because the individuals that will be a part of this mastermind are people that are implementing these advanced debt reduction strategies, such as credit banking. Also, there's a business credit, HELOC strategies, so many different things. CJ Wallace is a member of this mastermind. He is obviously going to be participating on a weekly basis with us as well. So if you have velocity banking questions, this is the place to be. If you're interested in implementing this and learning from other folks, because some people might have a specific strategy. When I say strategy, what does that mean? Like you might have applied to a specific type of HELOC, or there's a certain interest rate, or you have a particular loan officer, or there's a mortgage plan. With all of us masterminding together, we will be able to harness each other's strengths, each other's knowledge. This is going to be very powerful. Now, the way this is going to be outlined is we're going to do this for about an hour. If we get into a robust conversation and we're really going, we'll keep it open for about an hour and a half. But for an hour is what we plan to do. So for the first 15 minutes, we'll spend some time instructing on a key aspect of credit banking, so that you can, each week that you attend, you'll be getting a nuance, something that we dive into. Today, what I really wanted to focus a lot on this week is really budgeting. I mean, it's no fun, but I really got some good stuff and some information I want to share with you. So I'm going to go over that real quickly with you. Again, my name is Joseph Smith, the one, the only, and I'll be your guide today. Now, what'll happen is from week to week, you might be trained by myself, of course, my business partner, Ray Fleming, as well as you never know, we might get a guest host. Guest hosts. We might have the host, CJ Wallace himself, in on the YouTube channel. So just always be mindful that you never know who's going to come in and what experts and what guests might be here. We'll have times for people to give testimonials and share the impact of credit banking on their lives. This is going to be real exciting. I'm super glad to bring this to you because we want to make 2020 your breakout year, the year where you overcome these obstacles, the year where you experience the year of the Lord's favor. That's our goal. So let me ask you, what is the lost American dream? Well, it's financial freedom, because none of us seem to have it. We all want it. We all imagine the American dream of prospering and having the house and the car and the kids and living that life that we always dreamed of. But unfortunately, on our way to living the financial dream, we all experience the American nightmare of debt and even more debt. It's become its own indentured servitude. It's the new slavery of the 21st century. if these are going to be the roaring 20s, we have to break free of all this debt that holds us down. It's like a millstone around our neck. So financial freedom happens. This is how we're going to define it here for the purposes of credit banking. Financial freedom happens when your passive income equals your monthly expenses. Very simple equation. You have your monthly expenses, whatever they might be, and you subtract from that your passive income. What is passive income? That is income that comes into you that you don't actually have to actively work for. You don't have to get up at 8 in the morning to go get that. That could be you have some kind of investment, dividends get paid to you, interest that you're collecting off of loan that you might have lent out. If you have rental properties, could be the rent payment coming in. Passive income that you didn't have to actually work for to get. You didn't put any time into it. See, a lot of us, when we work, we trade our time for a paycheck. Passive income is no time was put into this. This is just from an asset that you own or an investment that you made, and you have the money coming in off of that. So when you take your monthly expenses and you subtract your passive income, what you then have is your monthly financial freedom goal. So an example of that would be if your monthly expenses were $3,000 and today your passive income was zero, well, then your financial freedom goal would be to get $3,000 a month coming in, right? If $3,000 a month was coming in passively, then you wouldn't have to go to work. You'd only go to work if you want to, if you enjoy your job and what you do. Now, how much money will you need to invest to create the passive income needed to reach your financial freedom goal? Well, again, we've broken that down into another equation for you. Your financial freedom goal, you need to multiply that by 12 because there's 12 months in a year, right? And you divide that by your return on investment or ROI. And that'll equal the total amount of money that you need to invest. So let's look at an example of that. So we talked about our $3,000 as the as our financial freedom goal, right? Because those were our monthly expenses. Now, if we multiply that by 12, we get $36,000. So what do we have to do? Well, if we have investments and we're making money on our investments, the interest that's made off of the investment or the return on investment that we get, we have to find out what is that. Everybody has a different risk tolerance level. If you want to be aggressive and invest in futures, something like that, that's risky, right? But the rate of returns are higher. Some people want to be more stable and go into mutual funds, things like that. Well, then your rate of return is smaller, but it's more stable. And then investing in real estate, which I like because you can double or triple what most investments out there are making. But let's just pick a number for the purposes of math. And let's say you have investments out there that you're going to try to make every year. Your goal is to make 10% on your money. Well, if we wanted to reach financial freedom, we would need to have $360,000 out invested. These 360,000 George Washingtons out there in the world capturing and fighting and other, at least 10%, right? Bringing captive back to us. That would bring us $36,000 a year, which would divided by 12 would be the $3,000 that we would need to pay off all of our monthly expenses. So sometimes a lot of us, we instinctively or intuitively know this, but we never really break it down. I mean, here we are at the beginning of the year. I mean, have you made your financial goals? If you don't get specific on these goals, they won't happen. So many times we just have vague, like, well, I want to make more money. I hear that all the time. I talk with people. What are your goals? Oh, I need to make more money. If I meet with somebody in person and they say that to me, I pull a quarter out of my pocket and flip it over to them and says, there, okay, next. I mean, if you don't define what that is, then you will never achieve that goal. It'll always be something that's out there that's unattainable. So here we're clearly defining what our goals are so that if we make a budget or we have a budget, we know what we're trying to reach. So in this example here, once we can get to $360,000 of investment capital, and if it makes us a 10% return, then that'll meet all of our expenses. We will have enough passive income where we won't have to work. Now, getting to $360,000 invested and earning 10% on that, that's actually obtainable. I mean, what does a house cost? What does a brand new house cost in your area? I mean, wherever you're at, that could range anywhere from 50,000 to 500,000, right? It just depends is the answer there. But how many different investment properties could you start working towards investing in if you're a real estate investor to gain full equity in the property and start cash flowing those properties and have those bring in the return on investment that you need? So, I mean, what we want to do as we mastermind, as we network, we want to come up with something that's realistic. We don't want to have pie in the sky numbers like, I want to make in 2020, I want to make $1 million. Well, that's a great goal if you already have $1 million in the bank, right? But we need to set our if you don't have any experience, you don't have any investment, and you have just a ton of debt, we have to work at this step by step. So the first thing is for most folks that you're saddled and you're laden with so much debt and it's just weighing you down. So that means what we have to do is we have to get you out of debt. And then once you're out of debt, then from there we can begin to build wealth. So the focus here is let's get out of debt, but we don't just get out of debt. And that's where so many people get, they don't keep their focus. Because honestly, if all your goal is to eliminate debt, it's not very exciting. It doesn't help you to be inspired. You lose focus very quickly. But if you can have a goal, not only to get out of debt, but to begin to, what does that mean? Like here, the goal is to have enough passive income coming in where you have financial freedom, where you wake up every morning naturally without an alarm clock buzzing in your ear, where you wake up and say, you know what, kids, let's go and have some fun today. Let's go out to the mall. Let's go to the museum. Let's go out and whatever, take them to the skateboard park. But you get to do this. You get to have the time freedom to be with the ones you love, doing the things you love to do. That is something tangible. That's something you can grab onto, and that's something that can carry you through the process of eliminating your debt. So credit banking as a strategy can take 6 months, 18 months, 7 years, 11 years. I mean, it just depends on how much debt and how much cash flow we can free up. So with that said, let's start getting into the budget, right? Here's our little map. You know, we're searching for the American dream. We're searching for financial freedom. So I've gone over this with you a lot, the pie chart of the budget. So you have the 2 income, watch out, there's so many pitfalls and traps, right? But if a 2 income family net brings in $5,000, and then we look at some of their basic finances, you're going to see that they are paying $1,200 a month for rent. They have a $200,000 loan at 6% interest. They have also a car or a couple of cars where the total expenses on the vehicle are $600, right? These are things that we've seen before. We go over. What about you have credit card debt, the minimum payments on that. So if you have a $15,000 limit over all of your lines of credit, you're carrying a $12,000 balance. Now, all of these are averages. I'm just sharing some averages with you. These don't necessarily represent your specifics. That's why I gave you the website, which is going to wiseguysandties.com/credit. Give us your exact numbers, and then we'll be able to go over that. But when we start looking at a budget, we see that, you know, you have your living expenses, whatever your lifestyle is. You go out and get a Starbucks coffee, right? That's you know, if you get one every day, that's pretty expensive, right? I wonder what the average cost per gallon would be for for that. All right. So, like how much is gas per gallon, or how much, bottle of water, what we spend on bottled water, what would that be per gallon? What is Starbucks coffee per gallon? It's got to be the most expensive liquid on the planet. And then, of course, there's what we put away in savings. We have long-term savings, such as what's in our 401k and IRAs, and then we have our short-term savings, what we might actually put in a savings account. And then if we're looking at how the average budget is probably 1,200 of that, 12 to 1,300 of that will be going to an actual 401k IRA, and then you have maybe $100 to $200 of that might actually go into a savings account. But the average, American family, this is whatever your numbers are, you have so much money coming in, and that's like the exact same amount of money going out. I mean, obviously, some of us have more money going out than's coming in, and so what do? You look to borrow money from maybe, as I always say, Uncle Visa and Aunt MasterCard. But you can only do that for so long. So let's start trying to figure out a way to pay off these debts. Here's a great question: how do you know which debts to pay off first? Well, this is a great training that I want to go over this with you. We want to identify which debts are the most inefficient. Okay, so people ask us, and these are questions that I get: should you pay off the biggest debt first, or maybe the smallest debt? Like, oh, I got all these little small debts, let me pay them all off first. Or should I pay off the lowest interest rate? Or maybe I should get rid of all those high interest rates first. Well, what we do is we have a formula that it doesn't matter what the amount is or what the interest rate is. You just follow this formula, and this helps you to figure out which debts to pay off. So as you see here, it's E equals B divided by P, where E is your debt efficiency, is expressed in a percentage, and then the way we figure this out is B is your loan balance, however much you owe, divided by your minimum payment. So we have just an easy example here for you. If both loans are $10,000, but one is you have $100 monthly payment, and in the second loan you still owe $10,000, but you have $1,000 payment, and the terms on these could be totally different. One might be paying back over years, and another one might be paying back over months or weeks. We just run this through our little equation. And so after taking the amount you owe and you divide it by the payment, the monthly payment, we come up with numbers as expressed here on the screen. So then what we do is we put that into what's called our debt efficiency continuum, right, from 0 to 100. And basically what you want to do is you want to pay off all the lowest numbers first, because those are the most inefficient loans. So that's how you choose which debts to pay off first. So in this case, as you start looking at all of your loans, you're going to look at every balance you have and every minimum payment, and you divide it all out, and then you will come up and you'll be able to lay in front of you on the debt efficiency continuum where all of your debt is. And you can find, so if something's closer down by the 10, like the 0, then what you want to do is pay that off as fast as you can. If something's right around the 50 area, if it's right there, that's something where, see if you can refinance or get some better terms. And then of course the closer you get to 100, even though you might have, that could be a debt and it's a payment, it's actually very efficient. So you might prioritize paying that off last. And sometimes, especially when you look at how we build credit, how we and help increase your credit score through what's called transactional history, payment history, keeping efficient loans in your as your active debt is really good, because paying your debt all the way down to 0 is good, and obviously in many respects. But if in the future you're looking at getting access to more money, other people's money, borrowing money, lenders want to know that they can make money, right? And so the more that you keep paying and you show active there's a balance that's being carried over from month to month and payments are being made. This continues to help grow your credit score. So again, there's so many different variables and factors to go into, really dive into this, but I wanted to give you an idea to really start focusing on this. So what I want to do is, obviously, if you guys have any, I know this is the first time, so as we get used to this, other people will be seeing this video. Go to wiseguysandties.com/credit-banking, right? And you fill out the form and you can put your financials in there. We'll keep everything, private. We won't share any names, but we'll be able to go through actual finances and basically answer the questions that you have. A lot of people have questions. A lot of people see CJ Wallace on this channel. He goes over in great detail how to implement strategies and how to take your credit cards and pay off mortgages, how to use debt to pay off debt. I mean, how do you get rid of your debt? You go into debt to get out of debt. So also, this mastermind is designed for if you just have general questions, right? Think of it as like a coaching session. I'll coach you, you coach me, and we'll coach each other and we'll make each other better. So I'll share with you what I know. I've been helping people for the last 7 years implement this strategy. It's been very exciting. I've learned a lot. I've worked with hundreds of people to do this, but I don't know everything, of course. I'm not an attorney. I'm not a fiduciary. I'm not a financial advisor. I'm a successful business owner, a real estate investor, and I've helped a lot of people implement this strategy. Work very closely with CJ Wallace and a lot of his folks on this channel. A lot of you on this channel we've worked with and helped out as well. So let's go to some questions here. I got from Tico Blaine. This is going to be awesome. I've been paying down debt for a couple of years. Now I'm really looking into the velocity banking to accelerate it. Great. So how do you accelerate your credit banking, your velocity banking? How do you increase the velocity? Well, you pour more cash into it if you have the ability. A lot of times it's called the chunking method. If you have windfall, put that in there. You accelerate it by expanding. Sometimes people roll out, or they kind of dip their toe when they start doing this, like, we'll see, and they start paying some things with their credit cards, but they still pay off everything else with cash. So if you really want to accelerate your ability to create the wealth through credit banking, you have to commit to this, right? And I don't want anybody to jump in blind. That's what this is here for. If you're not currently utilizing the credit banking strategy, also known as velocity banking, also known as mortgage sweep strategies, right? Known by a lot of things, cash flow banking, right? If you're not currently implementing this, this is what this is here for. We are here to help you learn how to implement this. What are the things that you need to do? In fact, one of the other things that I brought along with me today is a form that I use to help a lot of our clients. Here, let me bring that up on the screen here. Yes. So a lot of people, I mean, maybe this isn't you at all, but a lot of people don't even have a budget. So I talked about that previous budget as an example, and I threw numbers in here, but people just don't know what's happening with their money. So by coming out with a comprehensive list here of trying to put everything I can think of into a budget, we help people try to accurately account for everything. So when you look at this list, just for first of all, you got to account for your income. If you just have a job, then we put your net income, what comes in off of your paychecks. But if you are having any type of investments out there, your interest, dividends, any other type of income coming in, maybe you have an annuity that's paying you. I don't know. So this is where we list all the revenue that comes in. Now, then we start going over all the expenses. So for the home, what's your mortgage? Or maybe you don't have a mortgage and you're renting. HOA fees, taxes, insurance, repairs, right? We start adding all these up. What about daily living costs? What is your groceries? Do you have dry cleaning, childcare? Do you dine out? Do you order pizza? Whatever it is. What about your vehicle? Fuel, insurance, repairs. See, budget is so boring because once we start talking about budget, it makes all of us feel like a little like uncomfortable, like, we start thinking about our numbers and it's so uncomfortable and we want to start thinking about other things, right? So how much is that cable bill? Do you spend Netflix or Amazon Prime, or what other subscriptions do you have? Do you have dues at a gym, right? What about any type of prescription medications, life insurance payments that you make? Folks, I mean, this isn't a comprehensive list, but it was designed to help people think it through. Have you planned for a vacation that's coming up? Have you set aside money for airfare, accommodations, right? All these different things. You have to budget for it. So many times people don't plan these things and then they go way over budget. Or the converse is also true. Sometimes people put so much planning into their vacation, down to the penny, down to the minute, and they have that all budgeted out, but they don't ever spend any time actually budgeting the rest of their finances. I've seen it all. It's quite interesting. But we have to account for, you're just trying to track and account for all of your spending. And some of this isn't all monthly. Sometimes it's quarterly. And so you have to figure that out. Sometimes, to make it simple, if you do have quarterly or semi-annual payments, just calculate, at least on a spreadsheet anyway, everything into what it would be if it was a monthly expense. That way you can account for it. But do you have any dues and subscriptions, magazines, newspapers? Those seem to be going the way of the dinosaur. But I mean, some people still get them, especially depending on your line of work. If you're in the education field, you might be getting some of these periodicals so that you can share them with your class. Do you give to charities? Do you tithe at church? All of this has to be in the budget. What do you allot for your personal grooming and your clothing? And I mean, people a lot of times don't count in their budget. When do you buy detergent and shampoo and all these things? All of these have to be accounted for in your budget. And then, what's on your paycheck? How much money goes to your retirement? How much money goes into different? I mean, what are you contributing to? If you have other investments, a lot of times there's taxes involved with that. Like say a rental property, you've got to account for the additional property taxes that go along with that. And then I leave room for all kinds of miscellaneous other payments because everybody's life is different and everybody has all kinds of things going on. Do you have kids? Do you not have kids? Does mother-in-law live with you? I mean, there's all kinds of things going on in your budget. But once you total up all of your expenses, right, the way this, my spreadsheet works is, all the way up here in the beginning, we calculate, what your income is. And then after going through all of our expenses, right, in this case, we're spending all the money that comes in. So look, we have zero cash flow. A lot of times what I'm able to do when I go over a budget with people is we just start looking. Look at your receipts, right? Sometimes it takes a month or two for us to find out how people are actually spending their finances. But when we start looking at where the money's going, it's not uncommon that we can free up an extra 200, 250. Sometimes I helped one lady one time who was like, just like, you don't understand, I'm on a fixed income and I just don't have any money. And when we looked at it, she was paying for three different life insurance policies. And as we and she didn't remember or realize that she was, but since we calculated each policy was like I think it was somewhere around $300,000 or $400,000. That, I mean, how many of those did she really feel like she needed to pay for? And in that case, she was like, well, I guess I'll drop off the other two. And so, and that instantly freed up $400 of extra cash flow on her fixed income right there. Now, that might not be you, and you might actually pay very close attention to every single item in your budget. Ways to free up, other ways to free up cash flow is to just look at like, are you saving money? What are you saving it for? Are you putting money? A lot of people contribute to right here to 401k and retirements. Some people are trying to come up with some kind of plan. So we have to sit down and try and think, is that the most efficient use of your money? Because you're sending money off to other people that are going to go make money with your money, and you don't really get that much in return. We start just questioning where people are at and what the risk tolerances are. And I mean, if you're willing to get educated and learn about how to invest your own money, then you don't have to go give your money to other people who are going to charge you a lot to do this, by the way, and try to make money for yourself. You can keep that money. So we've had a lot of people actually stop contributing to 401ks and IRAs and use that money to use credit banking as a strategy and eliminate all their debt. And then from the excess from there, we just keep it going, and we use that to become future investment money that they use to get into rental properties, for example. Now, I am very biased, obviously, towards real estate, and I just feel like it's because everybody's invested in real estate. I mean, even you right now are investing in real estate. It might not be your own, but you're investing in somebody's real estate. If you pay rent, if you're paying a house payment, you're investing in real estate. And so if we can take the money that's there in this trillion-dollar industry and invest in it and get the rate of return that we want, because the higher the rate of return that we get, the less that we actually need to have invested to make the money that we need. If you go back to the original equation of how to calculate your goal, your target goal, a lot with the real estate investing, with several of investors that I've been working with, it's not unheard of. Yeah, last year was a great year of making about 15 to 18% return on investment on several deals, fix and flips and everything. So got to keep that on the radar, because that's not what the stock. I mean, the stock market's doing great right now, but will it always? And I don't know. And someone will say, well, what about real estate? It doesn't always do great either. That's true, but when the stock market crashes, you can't, shelter yourself with your, stocks, your bonds, really. But you can still, your house is still something tangible. Whether the economy is doing good or not doing good, people always need a place to stay. So if you can provide safe, affordable, clean housing, then you're doing a service and helping people, even in hard times. Even in hard times, there's still somebody always collecting the rent checks, right? Why not you? Right? Why not you? All right, so let's look at another question. Love what you do, CJ. I'm learning a lot from y'all. That's from Millwood Best 21. Perfect. Thank you for the feedback. I love what CJ does too. He's really a great guy. He's one of my best friends, believe it or not. But I don't really know anybody, so that's not really saying a whole lot. Just kidding. So, folks, I want to open it up to any other questions that you might have at this time. Again, we're talking about cash flow banking. We're talking about credit banking. We're talking about velocity banking. We're talking about infinity banking, right? What is it that's on your mind? We still have some time left, and as we do this every week, and more people continue to submit their as they continue to submit their different what do we call this? If you submit your financial information that we're able to go over, then we'll go over specific examples. All right, so might want to make sure that my business partner over there is checking the emails, seeing any emails coming in, make sure that if we did have anything come in, we could go over it. All right. Someone says, I want to hear the football stories again. Haha. Oh yeah, there's a lot of football stories. But I mean, I don't know if everybody here wants to hear the football stories because we're here for credit banking, right? But definitely schedule a 30-minute consultation with me, and I'll tell you a whole bunch of football stories if you want. Such great stories. I will tell you one thing. I've had the opportunity to play against some of the best football players, and uh, it's just it's an amazing experience when you can when you learn about hard work and teamwork and the work ethic that goes into that. There's a lot of great things that happen. Also, there's drama that plays out too. I mean, I've had my coaches died. I've had players die. I mean, it's a violent sport. Isn't for the faint of heart. But still had a great time. Loved every bit of it. Loved what I learned. Loved the guys the camaraderie. But I learned also the value of working together, of having a plan, of working a system, and that's what we try to bring to you here with Wise Guys and Ties is a system that'll help all of you succeed as well. So let me see here if I can show you the website here. So here I am. I'm on the Wise Guys and Ties website right here, and so here all I would have to do is start entering, my name and then my email, phone number, check mark off the boxes, and then take a look. Here's the information if you want to go over with us. Put in your monthly net income, your total monthly expenses. Again, these are just placeholders. You put in your own information. Your available credit limit, your current credit balance, the loan amount that you want to pay off, right? With the original amount, whichever it is. I mean, you might have multiple loans, but we'll just pick the one, right? We're going to go and use which one do we pay off first? Well, we take all of our loan balances, divide it by our monthly payment, and then we look where that falls on the continuum, and the lowest number ones is the one we pick. So pick that loan, and then we need to know what the term is in years. Is it a 30-year loan, 10-year loan, 5-year loan, right? What was the loan start date, the interest rate, what is the current monthly payment, and then your current situation. All of these are optional fields, right? The more information you provide, the better we can help get a picture of what you're doing. But if you want to list in some more information, you can. What I stress is don't give us any account numbers, don't say the name of your bank or the name of your credit card. Just say like credit card one. Like, I don't want the liability of having any of your personal financial information. But if you would like some opinions that I can share with you based off of just raw numbers and data that you give me, I'd be happy to share with you from my experience what we can do. And so then you click submit, and that shoots an email right off to me, and it gets you registered for credit banking. You'll receive within a day or so after submitting the credit banking form, you will get an email with the link for the next credit banking webinar, credit banking number 2, which would be next Tuesday at 6 p.m. Pacific and 9 p.m. Eastern. All right, so where are we at? We've got plenty of time here. CJ Wallace's YouTube channel, we're grateful that he brings us as guest hosts from time to time, and we're looking forward to working with all of you. All right, Mr. Fleming, do we have any other questions coming in?
No, not as of yet.
Perfect. Great. Well, I mean, we do have. What do we have? Folks, if you have questions, go ahead and enter them right now. Let's see here, and resume that. Perfect.
So why not just make extra payments?
Okay, so I got a question. Why don't you just make extra payments? I was talking with somebody today, and or not today, this was a day or two ago, and somebody was just saying, when I look at the credit banking, I don't understand why I wouldn't just put money in a savings account and chunk it down. He was looking at the math of it, and he was saying I could achieve the same goals if I save this money up and put it there, put it into it. Now that might not also be the question. The question would be, why don't I just make extra payments? And some people have said, well, the math works out similar that way as well. I'm going to say yes, it does. But here's the power of credit banking, the power of velocity banking, the power of cash flow banking, mortgage sweep strategies. It's all about leveraging other people's money. When you use your money to pay off a bill, you use your money to chunk it down, it's gone. Just it's gone. That's it. Because loans and all these different bills that we have to pay, student loans, home loans, auto loans, they're what we call one directional. So you make a payment and it's gone. The buying power of that money is now gone. You've reduced your debt. Hopefully, you made it a principal only payment. But what happens is you lose all the leverage and the buying power that was available with that cash. Consider doing the same thing, making the same lump sum payment or chunking method or extra payment using a line of credit now. So you use a line of credit, that's somebody else's money, right? You have a credit card, a line of credit, a bank, a credit union. So that money goes paying down your debt, leaving your cash still in your grasp, as well as every time you pay money on a line of credit. I mean, let's say hypothetically the payment's $100. So $100 of your cash goes paying that line of credit, goes to that bank. Well, what happens to that? It's revolving. It's a revolving line of credit. So that means even though I paid $100, right? What did they really take out of that? They might have taken 1, 2, 3% as a principal pay down, and then there's another like 1.5 or 2% that might go to the actual interest, because remember, the interest on credit cards is an APR. So even though you see 18, 20%, 30% interest, you got to divide that out by 12 to find out what the actual monthly interest rate is you'll be charged. And you're only charged that interest on the balance. So if it's non-amortized, which means interest only payments, then boom, you just that's really simple. That's easy. What's the total balance? What's the interest rate? Multiply those together, divide by 12, and that's your payment. But if you do, most credit cards require you to pay 1, 2, or 3% of the balance at the same time you're also paying the interest. So you come up with that generates your payment, whether say it's $100 payment. You make that payment, and the thing is again, it depends on what the interest rate they're charging and what percentage you're paying down. But just on average, you put $100 out there, and your available limit, it comes back to you. It's not cash. It doesn't come back to you in cash, but that money that you spent comes back to you. Not all of it, but a large portion of it, could be as much as 80 to 90% of it comes back to you in an available limit. And which is also why it takes forever to pay a credit card down, because so little bit of the actual payment is going to principal pay down. So, but the rest of it is coming back to you in available limit. So yeah, you made $100 cash payment on a line of credit, but if that means that your available balance came back to you with $80, what did it effectively cost you? Maybe, you total of $20. Again, there's a lot of factors, and we can pull out the math and do the equations and figure that out. But that's why you want to not make extra payments, because that means your money's gone. You want to use a credit banking process. You want to use a credit card or a line of credit, which is other people's money. You want to leverage other people's money, because that's how you actually grow and accelerate your own wealth creation. Hopefully that was a good answer to the question. So I have another question here from Sam Walton. What options do I have if I don't have a line of credit? I love that question. That is a good question. Well, you have several options open to you. First of all, if you don't have a line of credit, my first question would be, well, why? And let's say the answer is because you have really bad credit, or there could be a whole number of reasons, but you can implement credit banking strategies if you're able to go out and get a secured line of credit. Well, how do you get a secured line of credit? Well, the same strategies that we use with, as you hear CJ talks about velocity banking all the time, velocity banking, credit banking, if that's throwing anybody off, it's synonymous. Credit banking is when we go ahead and we take our income and we channel it through a line of credit. If you don't have a line of credit, you take your income, say you get your check, and you go down to the bank, you say, I want to open a secured line of credit, a secured credit card. They could do that a number of ways. They could put it on deposit in a CD. I mean, every bank is going to have different options. I do find that the smaller the bank, the more options you get. The bigger the bank, the fewer options you get. So you have to do some of your own homework there. But you go ahead and put your income into a secured line of credit. It's secured by your money. So let's say you're able to put $5,000 of monthly income into a secured line of credit. Well, they will allow you to access maybe anywhere from 80 to 90% of that line of credit. So that means even though you have $5,000 in the bank, you effectively now have a credit card that you can use that might be $4,000, $4,500, and you can use that to begin doing your credit banking. For other people who don't have access to a line of credit, there are also other easy ways to get access to lines of credit if you start a business. I'm very big proponent of starting a business. I have a whole business that surrounds businesses getting credit, but your business can act like a person, like an entity. With you have a social security number, your business has an EIN number, and your business, if you follow the right path and the right system, can build its own credit and get access to credit cards that way. That process can take anywhere from 6 to 12 months to get to the point where your business has $25,000, $50,000 in available lines of credit. So those would be probably the two best ways that I would say to do that, Sam. Thanks for the question. All right, we have CJ Wallace saying there are a number of options available. What about a credit card? Do you own a business? If so, you can build it where you can get the credit line not tied to your name. Perfect. It's as if CJ and I share the same brain. Perfect. Great question. Yes. So you want to either look at doing a secured line of credit, or you want to look at doing business credit. Both of those are great options for establishing a line of credit. All right, folks, we still have some time here. All right, so I have another question here. Can you go over my form I submitted? Well, let me check the email. Let me check the email. All right, folks. Somebody submitted a form. That's awesome. Let us see what we can see. Okay. So I'm into my email here, looking around, and what do I see? I've got an email. Okay. Let's take a look here. Okay. So we're looking, I've got some numbers here. I got some income, some expenses, some available credit. And all right. So we've got credit balance, we got loan amounts, we got the term. Wow, okay, great. You filled all of this out perfectly. Okay, so here's what I'm going to do. Okay. Let us, okay, so we've got our net income that we're working with, and we have expenses. So right there, we can start right there as and we have some available credit, and we have balance. All right, this is going to be some fun stuff. All right, thank you so much for filling out this information. I am on getting that to you right now. Trying to get, what's the guy have to do to get to his desktop? Okay, perfect. So what I like to do is, so we're evaluating a couple of different things here. We're looking at the cash flow. We're looking at several things here. Could you put that up on the screen here? All right. I'm just sorry. I have to go back and forth between looking at this all. So what I'm going to do here is I'm going to, first of all, I'm looking at the total income, and then I'm looking at the expenses, and then we're coming up with $3,300 in terms of cash flow. And then we have as well, it looks like about $5,500 available in the line of credit, and it looks like we're a little bit under 50% utilization, which is good. Now we have a large loan that needs to be paid off. So let's take a look at that. So I'm going to put the loan amount in here, and then okay, so I have to shrink all my screens down. All right, so here we go. Get everything on one screen for me. So we're putting in, we've got a loan amount here. Thank you for putting that up on the big screen. So we've got a loan of $326,650. Perfect. And got a great interest rate of 3.5%. Good job. However you negotiated that. Awesome. And we got a 30-year term on that. All right, that's good stuff. Okay. All right, perfect. All right. Okay, so I'm just entering in all of the numbers here that we have. Okay. Perfect. And then our term is for 30 years, which is also 360 months, which is good. Perfect. And so we have our monthly payment is $2,500. So that must be paying for some mortgage insurance in there or something. All right. Now, if you remember, we had freed up some cash flow here. We have $3,300 worth of cash flow to work out. Okay. All right. So, all right, this is looking good. I've pretty much, I think I got all the numbers here. Expenses, available line of credit. Okay. Okay, and so we have our, oh, I wasn't actually sharing my screen. You're right. You know, I need people to tell me when you can see what you can't see. Okay, hold on. I will start sharing my screen. I apologize. Boom. Okay. So you can see I've just been entering. Again, this is a debt acceleration calendar that we use for credit banking. So we are looking at these different lines. Well, what if you made extra $500 payment? Again, I haven't put in some of the credit banking numbers here, but so if we had zero cash flow over here, no, all right. So we put in the cash flow here, 33300, looking good. Okay, so when we talk about using our basic debt acceleration, that's when we're using credit cards. Advanced debt acceleration, as you see on your screen, is when we start using home equity lines of credit, large lines of credit. So what I'm showing here, if you see in this green category right here, is so I gotta just, I don't have oh, what's the interest rate on that that credit card? I might need to update my form for the interest rate on that line of credit. But anyway, so we will put in the income, which we had here, which and there the income just went away. And then the expenses are 200. Perfect. So as we look, utilizing the information that you have now I put in a 21% interest rate for the credit card. So we can adjust that based off of what the actual interest rate is. Let's just look at that for the moment. If your income was 9,500 and your total expenses were 6,200, which means you have $3,300 of cash flow, then it would take you 5.92 years, so pretty much 6 years, to pay off the entire debt. So then your effective interest rate would drop down based off of your savings from 3.5 to only paying 2.72%. And you would save yourself $18,963 of interest. And $18,963 of interest saved is $18,963 earned. Yeah. Oh yeah. And you're paid off way early. So now this is where if you have questions, also when you join in with this mastermind, I will make sure that the people that are utilizing this mastermind get a copy of these the debt acceleration calculators. That, you know, these are programs that I run and use on my program. I mean, all of this is just different formulas that we put together. It's all still based off of the same information that CJ Wallace draws up on the dry erase board, right? This is all just same information, but it helps me go through the information a lot faster when I can put this information in. So what we're looking at here is great example of when you have a lot of debt, because $362,650, that's a lot. I mean, that might take people years to pay that off. All right, personal line of credit at 12.5. Okay, so the question I have coming in is, I have two loans, a personal line of credit 12.25% and a credit card at 16.74. Right. So I so I mean, okay. The question is how can I get this? Um, I don't know exactly how can you start implementing this? Well, um, you're gonna put a portion. Okay, so what are you doing? How are you paying this? All right. We haven't really talked about today how to implement the actual credit banking. And when I talk about implement, it's because every week we go over different aspects. Today has been budget. Next week we are really going to talk about the different ways interest is amortized, and then the third week we really go over a lot of strategies. But here, what I want to tell you is that there are ways for you to run your entire income through your line of credit. So you've got that credit card, and you have the line of credit, and what you're going to do is you're going to divide up based off of the available balance, which part of your income goes to which line of credit or credit card. But you're going to funnel all of it through there, right? If you do this the right way, and you're going to wrap up all of your expenses through your card. When I start going over how to implement this, there's so many questions, right? So, well, how do you pay a mortgage with a credit card? How do you do these things? We're going to go into a lot of this depth, but I'm just going to give you the basics right now. Is that you're going to channel all of your income through these lines of credit. These lines of credit are like little piranhas, and you've got this big, huge debt, and these are going to be chomping little bites. So what happens is your credit card makes a big, huge, like one-time principal only payment. And I get a question, well, how do you do that? Well, we work with different types of companies that help us as a third party make those payments so that you can use a credit card to pay a mortgage, or you can use a credit card to make an auto loan payment or a student loan. There's ways to do that. So what we do is, so once you make that big payment, now you have a huge amount of debt that's now sitting on your credit card. The interest is amortized differently on a line of credit and a credit card than it is on the loan. So what we're going to do then is we're going to, by channeling all of your income through the line of credit and the credit cards, we will be paying that down very quickly. Um, so whereas we might, so two ways to do this. So you have available right now $5,500 on the line of credit. If we immediately use that, then your utilization is going to go up and your credit score is going to go down. However, this is going to be lowering your total debt. So your income to debt ratio is going to change, and that's actually going to go down, which is good. Or the other way to do this is, let's use credit banking to eliminate the current $5,000 that's sitting there on the card, so that we get the line of credit or the lines of credit and the credit card down to zero. And then we only use up to that 50% utilization, so that we don't negatively impact your credit score. You could go either way. It depends on what's most important to you. Some people are like, getting that paid down as quickly as possible is the most important thing. Other people are like, well, no, I got to protect the credit score. That's the most important thing. So you got to prioritize. So let's say that to do this the right way would be to eliminate all of the current balance that exists on the current line of credit and the credit card. Well, we would just sweep that down by funneling. So you would have your net income of $9,500 go into that line of credit. Well, obviously, that would pay that off, and there still be surplus. So that surplus would then be in your checking account. But then you would then have your expenses pay, right? So the surplus, meaning what wasn't used to pay down the line of credit, you could use that money to pay off your expenses for the first month of doing this. But then now you're down to zero. Then you can now take a huge chunk, right? The 5,000 or 5,250, whatever that is exactly, on your line of credit, and then you start sweeping that down, and by the $3,300 in cash flow means every 2 months you're able to clear out the lines of credit and then go make another principal only payment for up to the 50% of your line of credit. And then after making that payment, then another 2 months of income and expenses go by, and you've paid that all off, and then you're back again making taking a huge chunk. Each time you do that, each time you're making those big, huge principal only payments, you're saving yourself interest because of the way on a loan, the interest is amortized differently because it's front loaded. And so you're paying way more interest up front early on in the loan. So by doing all these principal only payments early on in the loan means that we're skipping over a whole bunch of interest. In fact, as you see, the savings would be $18,963. But even more importantly is the time. You're getting the whole loan paid off in 5.92 years. And that, of course, if the starting balance is 326,650. If you've already, paid down, 5, 10, $20,000 of that, then that's where, so where we look at what the starting loan balance is, that helps me figure out the amortization schedule so that I can know how much interest is saved. But when we actually calculate how quickly you'll pay off the debt, I have to know what the current balance is. So, I mean, again, I'm trying to create a form online where I don't ask you 100 questions. I'm trying to get it down to as few questions as possible so I can get some immediate information out to you. But so if you have paid down a little bit more on this, then you will be able to even shave a little bit more time off. All right, man, what a great example. I want to thank you, Rochelle, for sharing that information. And of course, if you'd like to, work with us more, you definitely can. We have our contact information here. Let me go ahead and share my screen again. If I can. I love technology when it works, folks. It's awesome. Boom. I think I'm sharing my screen now. All right. So what I'm putting on the screen, hopefully you can see, is the contact information for the Wise Guys in Ties. And what we want you to do is we want you to be able to contact us if you want to schedule a 30-minute private consultation. That's free for everybody. And then we also want people to know that in the future, again, every Tuesday night at this time, we will be going over this credit banking mastermind where we work together and strategize. And I mean, there's been a lot of great conversation going on in the chat. CJ's been very active as the Velocity channel. So this has been a great mastermind. This is a great first start, a great kickoff to 2020. But if you want to get your numbers and have us go over them, especially where we can, and you can ask questions as we go, go ahead and put your information in. Go to wiseguysanties.com/credit-banking. We look forward to working with all of you. The goal here of all of this is for all of us to break the shackles that have bound us down, right? If we could break free of that debt, think of all the cash flow that frees up. I just feel, if you're like me, you feel like you were meant for more than just working at a job to make enough money just to pay the bills. Because when you get your paycheck and you realize that it's already spent before you even go and deposit it, it can feel very unfulfilling for your life. I mean, to be very, to put it mild. So what I want people is to move beyond that, because you might have dreams and goals and aspirations. What were you put on this earth to do? That's what we want to empower you to do. The Wise Guys in Ties are here to help you do that. We love and working with CJ Wallace because he's committed to seeing everybody become a success. I love working with that guy. Thank you so much, CJ Wallace, for hosting the Wise Guys in Ties. If you want more information and working with Wise Guys in Ties, but you don't have time to wait for our consultation, go over to the Wise Guys and Ties YouTube channel. We've got tons of information on credit banking, on how to do business credit, all kinds of great tools and information for you to build and grow your business and eliminate your debt very fast. I want to thank you so much for having us here. We can continue the conversation again next week. For those who want to maybe not work in the group mastermind situation, you can always contact us for a private consultation, and we'd love to work with you there as well. Again, you can give us a phone call. That's 888-524-9273, and or go to wiseguysandties.com. Thank you so much, everybody, for being here tonight. Good night, and God bless.